Jeez.
Okay, we are now live. So, hello and welcome to those of you joining just a few minutes early. My name is Charlotte. I'll be your money show host for this session. I do have Peter here with me in the Zoom room. We are ready to begin on time at 4:30 p.m. That's Eastern time, coming up in just a few short minutes. Thank you all so much for your patience, and I hope you've enjoyed the show so far.
What's the stock market doing? Ouch. Getting bitch slapped, huh? Just had an interviewer on Bloomberg go, and what's going on in Bitcoin? I said, I don't know. That's fantasy world. She, she was so upset. She was like, what? I said, you heard me. I go, who makes it? Where's it come from? And where can I take it to a bank and have it cashed in so I can buy some bread with it? And then she like looked at me. I said, I'm a gold trader, lady.
I want to see it.
Yeah, I want to bite it, you know? Can I make
Yes.
teeth out of it, you know?
Oh yeah, I understand. I feel the same way, I won't lie.
Oh yeah. Yeah, I'm really nervous about the euro could just get decimated here. I'm thinking another George Soros day, you know?
Wow. Yeah, so a few more people joining us. So I do just want to pop in and say that we're starting in just a couple of minutes at
Sure.
4:30 p.m. Thank you all for your patience. And Swati in the chat says greetings from New York City. Hello, Swati. Welcome. Hello, everyone, and welcome to the session. It is my pleasure to introduce Peter Thomas, the chairman of Osecure, acting as the chair of offshore development. Now, Peter's perspectives are based on over 40 years of experience in metals trading. He has been featured in numerous magazines on different networks, including the Wall Street Journal, CNBC, Bloomberg News, Forbes, US World and News Report, Kitco News, just to name a few. And his podcasts are also available on YouTube. Now, to our live viewers, please send any questions or comments into the live chat box. It's to the right of the video player, time permitting. We'll see if we can get to those at the end. And with that said, Peter, I will hand the mic on over to you. I'll be here if you need me, but the floor is all yours.
Oh, thank you so much. It's Hello, everyone. A lot of people here from New York. I see you guys are getting hit again with more storm. Keep your sweats on, enjoy your cocoa. I'm going to try to bring everyone up to date. Big day today. So I'm going to do just a quick overview of current events so you're up to speed, and then I'm going to go into what you're here for, which are the facts on silver and why we are where we are. First off, some very dovish news from the Fed came out, drove gold to 5,200 in the futures. That's why we had the rally. A lot of texts coming into me. What's going on? That was it. We were very, very surprised. We had a historic day today in silver. Think about this. Silver is officially up year on year to date 200%. Those of you that bought metal, congratulations. Officially today, last trade, 3.9% higher on the day. Massive rally in all the metals, and we're going to have to see what the dollar does. Weakness in the dollar, being down 9.9% per annum is certainly driving these metals higher. So that's a quick overview of what's going on, and welcome. I'm going to take a little bit of time now, dive into silver, tell you why and what is driving this market. And what's important now is I'm looking at metals for this year, but I'm going out to 2030. This is very important. Stay with me on this because the future is demand, and demand is what's driving the metal. And this isn't like you're buying Nvidia. They just print more stock and give it to you. It has to come out of the ground. There hasn't been a new silver permit mine issuance that is bringing stock out in 4 years. So we are 4.5 years behind. In other words, demand is outstripping production by almost 4.5 years. So that is a very germane thing, and it is going to carry through for the next few years. Why I'm bringing this up is because I want everyone to look at silver, look at gold, still stay in that long-term mode. We're not here as scalpers. We're buying and stacking, okay? So let's take a quick look. Very interesting numbers that I put together here. China last year exported 5,100 metric tons, long tons of silver. Now, they have a new policy which is being talked about, which is for 2026, which I love the Chinese. They go, this policy isn't going to hinder our exports. We're only going to not allow metals to go out if it looks like we need it to protect our industries. I'm like going, really? So you're saying you're not going to issue permits to people to export if it looks like demand is high, but it's not going to hinder the sales of silver. I honestly believe that's going to take about 4,000 tons right off the top, and I'll go into why. But I'm really looking at this, what they're referring to as protection industry policy is going to really disrupt a lot of silver that was coming into the market. So let's be aware of that as we go forward. Um, we're we're looking at a tremendous demand in electric vehicles. So we're going to switch into that for the moment. Right now, electric EVs are consuming about, let's call it 50 grams per vehicle right now. I believe that's going to go up, but right now it's about 50 grams. And the production of EVs, according to the numbers I'm seeing, are going to double by 2030. And what that is going to do is obviously the consumption of silver. This is the first one of many that I'm going to talk about. Will be pulling silver off the table. The next thing that's never happened before, and I think you should be cognizant of this because it's when we see or when I see a change in a long-term market, that is going to affect the fundamentals of that market that have never happened before. I try to bring them up to my viewers. What happened was Samsung, which is a gigantic producer of electronics, has been buying from two or three people that I've done business with for years and years and years. They just went to Mexico. And there's a mining operation, I hope I pronounced it right, La Parilla, and said, we want to buy all your lead and silver production for the next 2 years. And they said, we'll sell you our concentrates and we will pen the deal. So what happened is, for the first time in the history of really in metals, we've had a major electronics firm come in and go, look, we have to make what's referred to, if you're familiar with this, what's called a silver paste, which they do soldering with. Also, they connect keyboards with, because silver is tremendous as far as its conductivity goes. So it's used in phones and in their TV production and things of that nature. And so what they did was they said, we think there's the potential for shortages. So we're going to go to the country that's mining it and we're going to buy it directly from the mines and cut all the middlemen out. This has never happened before. So the idea that we're going to see direct consumption by electronic firms from mines, taking that off the market. It's not longer going to be available. It's very significant going out over the next few years. We will see how big the demand is for electronics, and it looks like it's going to increase, in my opinion. I think everyone else's. The next thing, which I feel is important because of AI. And on Bloomberg about 2 years ago, I said I'm no longer calling silver, platinum, palladium as well, and gold, of course, as precious metals. I said we're going to start calling them tech metals. And the narrator said, that makes a lot of sense. I said, yeah, I mean, we're seeing massive consumption, not only in the chips themselves and the usage of gold, but of course in the silver. So as I call this the tech metal, you will continuously see new demands occurring, which is why I brought up the Mexican deal. That is a new demand, and it's being satiated in a new way. So I've been doing some studies on nuclear power plants. And as it turns out, the estimates for a power plant are about 55,000 ounces of silver, which is non-recyclable. Remember that. All the metals that are going into rods and conductivity on a nuclear reactor, they're not going to be bringing them back to the market. They're going to be radioactive. They're going to have to go out to the desert with all the other stuff. So I did a horizontal study on this, and I'm trying not to bore you, but this is important. The nuclear reactor estimates are 1.2 to 2.3 million ounces will be needed for the production of electricity from new reactors by 2030. It's a big number. It's a guesstimate. Don't get me wrong. It's a guesstimate, but I worked pretty hard on this, and I think that is significant. It's part of the pie we're putting together here right now. Now, the next thing that I want to go into is solar panels. Now, when they make a solar. Now, here's an interesting number for you guys. Think about this. China is producing one solar panel every 60 seconds. Massive number. And I foresee that's going to increase. Its demand is great. And they make a colloidal spray that they spray on, absorbs the sun, and we get our conference or our conductivity into electricity. Now, right now, pushing the numbers out in my study to 2030, solar demand for production will be 14,000 tons. That's 40% of the entire world production will be going into solar cells in China. Now, you could see why I'm going down this road. We keep adding and adding and adding. And you see why I have been telling people to buy silver for the last 2 years, and I'm not seeing any differences here. Automotive centers, which are information that they're sending, dealers are actually setting up their own data centers for their brand names. And as you know, if you own a car and you're paying to have various upgrades in your car sent out, they have their own data centers. There's AI data centers, then there's general data centers, plus general manufacturing. I'm looking at global demand at about, let's call it 1.75 billion ounces. Now, what that means to us, and I'm going to give you our projection, production is going to be about 1 billion ounces. So we're going to be into deficit usage again. And that means the 4.5 years that we're seeing now is going to continue to compound. So what that means is we're going to continuously be running short of silver. Now, at $100 an ounce, silver looks cheap to me. I've been talking to COOs of various firms have called me and they said, Pete, we're at 100. I need to make silver wire. I need to make paste. I need shot for jewelry manufacturing. Should I buy out into June for my production numbers? I'm telling him yes. So what I'm seeing is this. Everyone's saying, oh, these prices are high. But I'm seeing the consumers, the guys that use this to manufacture, saying, 100 doesn't look too crazy to us. Should we be buying out to the middle of this year? And they're all agreeing with me that $100 isn't crazy. Now, are we going to have ups and downs? Of course. Of course. Nothing goes straight up. But here's the thing. If the consumption keeps stripping out demand, we're not producing enough metal. This is a commodity. We don't print the stock. It has to come out of the mine. It has to be smelted. It has to be assayed. It has to be delivered in whatever form it wants, and then it's there. There are big delays into filling these gaps. So it looks to me like this shortage that we're looking at now, this, as it's being referred to, this squeeze is going to continue. Now, I had a very long talk with someone in Peru this morning, big mines in Peru, and very, very knowledgeable individual. And I've been trading with him 35 years. So he's been in and around the industry for a very, very long time. And I said to him, look, are we going to see the platinum palladium shift? In other words, when palladium was was maybe 30 to 50% over platinum, and they both have relatively the same conductivity. So they are what's referred to as interchangeables. I said, will we see that occur with silver? He said, absolutely. He said, we're going to see it for sure. And he said, I would not be surprised. And this is someone who is deals in this metal. Said to me, I would not be surprised to see copper being used in some way, even though the conductivity will not be as high. In other words, if you have a copper solar cell versus a silver one, you're not going to get as many gigajoules out of your farm or your basic volts or watts for your home, what's on your roof. It'd be less, but it'd be cheaper. So you're going to have to weigh that out. What is my productivity versus my cost? Just like everyone else, we all have to weigh that out. But it looks like at some point that's going to happen. I wouldn't be surprised. I wouldn't find it such a dramatic thing. Just expect it in the news. And from that, I think if we're looking at silver right now at 103, 106, 107, don't be shocked to see it test 100, but don't be surprised to see it getting bought up for usage. So I'm going to leave silver at that. And you now have my overview going out over the next few years and what's going on currently today with I'm calling it an embargo. The Chinese are just calling it industrial production holding. But any way you look at it, various things occurring in this tumultuous market are going to continue to push this higher, if not hold it at these levels. So we're buying dips and we're friendly to the upside. Now, today, let's go over to gold. Even though the vast majority of my questions that came in today were on silver, and that's why I wanted to spend the majority of my time on it so that you could see what I was looking at. Because the real question is now two things for gold. And I believe these are going to continue to be the drivers. One is geopolitical. All right, let's start there. You can, those of you who caught my special here on the show before, I did a deep dive into geopolitical, so I'm not going to go as deep today. But you could take a wheel and put names on it: Cuba, Venezuela, Ukraine, Iran. Spin the wheel. When it stops, you can talk about what the latest craziness is going on there. So we're having massive geopolitical things happening that are affecting the underpinnings of gold. And there's no question in Iran, massive demand for gold. In the Middle East, I mean, I had someone today call me and say, "Hey, I've I'd love to swap my house for some gold. What have you got? What can you do?" I mean, we're seeing dramatic shifts into gold from a lot of different places. And I think that pressure on the fiat currencies of those nations that are under this geopolitical risk are going to continue to buoy up gold, which brings us into the banks. All right. We have never had central bank buying like we've had before. And all of you that follow me on metals know I try to once a week or twice a week when I'm on the air at my various places, I try to bring you up to date on what the central banks have done. For example, Poland has been the number one buyer of gold for some time now, just massive inputs. So we're seeing that along with, and this is important, ETFs. We have never seen volume going into ETFs like we've seen now. So we have, geopolitical and central bank and ETF buying. I've been looking at Tether as almost like a central bank because it's over 100 tons. And when I did my stuff for South Korea, they only have 120 tons in the vault. So this is a company that's holding as much as a nation. So we're seeing massive consumption now for right now tech I'm looking at consumption at about 450 tons. I'm looking at central banks now. Generally, a thousand tons was it, but they're starting to fill their vaults, so let's dial that back a little bit. Let's say going out to 2030, maybe 700 tons coming off the table. All right. So that alone is going to let's say 700 tons coming off. The supply response has been very slow in catching up to demand. So I think we're going to run hotter on the prices. And I think we can add probably 50 tons to each year going out to 2030. I think that scenario is real. And I think that chip demand is going to continue to be the same. But right now, all in all, I'm looking at massive consumption by tech and central bank and ETFs that will continue to draw down availability. And I think we're going to probably drop down to maybe 1,800 tons available at the most. And that's going to really put a dent in gold because individual investors, jewelers, people that are on the outside of the major buy downs are are going to be in a tough way because there isn't going to be as much available. So I'm bullish for gold for the same reason I am for silver, but silver, the demand due to all the reasons I've given you, AI, lack of production, all of these things combined, the two metals are going to continue to look for new highs and continue to have new demand. I think on that note, we're going to take a few questions because I'm seeing a lot of them coming in here. And fire away, guys. I'll be happy to answer.
Fantastic, Peter. Now, I don't have any questions just yet on my end here in the live
Oh, I
chat on
got you.
Money Show,
Yep.
but I'll give them a couple of minutes here. I know you've been getting a lot coming through on your end. I'm not sure if you have any that you'd like to cover while we wait for this audience here to catch up.
Right. I've got one here from somebody. It just came in. He said, where do I take profits? All right. Let's look at that. I get that question every day from people. As you know, I create a lot of 401ks, a lot of IRAs, and people put metal into that. And a lot of people are now looking at these massive profits going, okay, come out. Here's the problem. Where do you put it? The dollar has dropped almost 10% in a year. The euro's just as bad. Where can you take that money and put it? I mean, has the AI bubble expanded to where, I mean, you're looking at 200, 300% upturns in their stock. I just don't know where you go, I mean, that's the problem. So I've been telling people that are up in their funds, I go, okay, look, go ahead and take half off the table, you know, and leave the other half in and then diversify it and do whatever you want. But hang on to it for the long term. So to answer that question, what am I going to do with my IRA 401? Where should I take profit? I would say 200% return. Go ahead, take some off the table, but use my numbers here and look for long-term either strength or continued higher prices.
Thanks, Peter. I do have a question here now from Gary in the chat. He's asking, do you like any Canadian stocks or ETFs?
You know what? I will tell you something. I had the pleasure to work with Eric Sprott. What a gentleman. And his daughter, Melanie, was terrific. She's the president now of the company. And I helped them set up a hedging desk. And I just high quality people. I don't look at a fund. I look at the people in the fund. And Mr. Sprott, intelligent, understands metal, and has created some great stuff. I would never recommend the stock. I'm not a stockbroker. I'm not an ETF salesman, but I would recommend these people. They do a good job. They're honest. Everything I did with them over the years was as it was supposed to be. So let's just leave it at that.
Fantastic. Thank you, Peter. This next question is coming in from initials XY in the chat. They're asking, what is the best way to invest in silver price buying options? On what ticker symbols?
Okay, option now. I don't have an options ticket per se, but I will tell you this. When you're looking at options, look at volume because you can have all the profit in the world, but if you can't get out of it, you got a real problem. So look at something that has a lot of volume. I will tell you that the people that I'm talking to, I'm not recommending it, but I'm telling you the people that I talk to that trade are looking at the SLV, and they're trading options off of that, and some of them have done very well and have enjoyed the liquidity of that market. I hope that gives you some guidance.
Beautiful. Thank you, Peter. And I think we have time for at least one more here
Oh,
from
okay.
Bob. Bob is asking if you can please identify a couple of silver and gold tickers or ETFs.
Like I said, GLD is a great ETF, and I'm not recommending you buy it. I just know that they run it well, and that here's, let me give all our viewers here a tip. All right. Don't ever buy an ETF that doesn't have physical. If their physical isn't behind what they're doing and they only have paper, you don't want to get involved. So use that as your compass. Look at the offering, see that they're buying or selling the metal against what their customers are sending in cash, and that will be your tool.
Well, thank you so much, Peter. I did go ahead and put that into the chat, Bob, if you were curious or if you just needed to take a note of it. But with that said, Peter, thank you again for joining us today. It's been wonderful having you on.
Well, I'm sorry I was a little bit late, but we had to catch and see what the Fed was doing. And as it turned out, it was rather dramatic. And I hope I was able to bring everybody up to speed. And thank you again for coming in to see me. I really appreciate all the questions and all the following.
Oh, well, the pleasure is all ours having you here, Peter. It's such a pleasure. But to our live audience, thank you as well from us at Money Show. And we do have more in store for you in this Money Show virtual event. Just be sure to tune back in tomorrow morning at 10:40 a.m. Eastern Time. We have another full day of presentations in store for you. I hope everyone has a wonderful rest of your day. Take care.
Bye-bye.